What happens when a giant falls? Picture this. A renowned corporation, the China Evergrande Group, suspended from trading for a lengthy 17 months, only to resume and experience a staggering plunge of 87% in share value. A reality too harsh to fathom, yet it unfolded right before our eyes. This fall of the Titan wasn't an isolated incident. It's a consequence of a series of unfortunate events. Evergrande, once a beacon of prosperity, is now grappling with monumental liabilities and losses. The number seems surreal, a colossal debt of 2.4 trillion yuan, equivalent to $327 billion. And if that's not enough, consider a net loss of $5.4 billion within just a 6-month period. A giant, once standing tall, now struggling to maintain its balance. The dramatic fall of Evergrande is a stark reminder of the unpredictable nature of the market and the unforgiving consequences of unsustainable growth. Evergrande's fall from grace was swift and severe. In the face of adversity, Evergrande has come up with a restructuring plan. The company, faced with significant liabilities and losses, is making a robust effort to turn the tide. A key part of this strategy is an offshore restructuring plan, which is contingent on the support of its creditors. However, the journey to restructuring hasn't been smooth sailing. The plan, initially set for implementation, has been postponed until the end of September. This delay is a testament to the challenges Evergrande faces in its quest to regain stability. Let's delve a bit deeper into the details. The restructuring plan primarily involves Evergrande's Class A and Class C debt. The company has managed to secure the approval of creditors holding 77% of the outstanding principal of its Class A debt. This is a significant achievement, showing that a majority of these creditors believe in Evergrande's plan and its potential for success. However, when we turn our gaze toward the Class C debt, the picture isn't as rosy. Support from holders of this debt category sits at a mere 30%. This discrepancy in approval rates between the two classes of debt underscores the complexities of Evergrande's restructuring efforts. The company is walking a tightrope, balancing the need to satisfy its creditors with the equally crucial task of restoring its financial health. This restructuring plan is Evergrande's lifeline, but will it be enough? Only time will tell. As the company's debts mount, Evergrande has turned to the U.S. for help. In a move that speaks volumes about the severity of its financial situation, the company has filed for Chapter 15 bankruptcy protection. This is not a step taken lightly. It's a move that signals a crisis, an attempt to find a lifeline in the midst of a storm. Chapter 15, bankruptcy protection, is not a get-out-of-jail-free card. It's a pause button, a moment for the company to catch its breath and figure out its next moves. It's a chance to negotiate with creditors, to try and find a way to extend debts and secure new borrowings. It's a negotiation table where the company must convince lenders that it's worth the risk. And the numbers at stake are not small. Evergrande estimates that it needs an additional $34 to $44 billion. That's billion with a B. These funds are not for paying off debts or for executive bonuses. No, these billions are needed just to complete the company's ongoing projects. So what we're looking at is a company that's fighting for its survival, a company that's in a race against time and against a mountain of debt. It's a high-stakes game where the risks are as towering as the rewards. It's a game where the company has to convince others that it's not just about surviving, but about emerging stronger on the other side. Evergrande's future hangs in the balance as it seeks ways to manage its massive debt. It's a story that's still unfolding, a story of a giant trying to rise from its own ashes. And as the world watches, the question remains, will Evergrande manage to turn the tide, or will it be swept away by the weight of its own debts? The fall of Evergrande has sent shockwaves through the financial world. This colossal plunge has far-reaching implications, not only for Evergrande's investors, but also for the Chinese economy and the global financial market. Investors are left grappling with significant losses and an uncertain future. The Chinese economy, too, is feeling the heat, as Evergrande's debt, a staggering 2.4 trillion yuan, casts a long shadow. The ripples of this financial turbulence are felt across the globe as markets grapple with the aftermath of this massive corporate failure. But what does the future hold for Evergrande and its investors? The company's offshore restructuring plan, set to conclude by the end of September, certainly offers a glimmer of hope. Yet, the path to recovery is fraught with hurdles. Evergrande needs an estimated $34 to $44 billion in additional financing to complete its projects, a formidable challenge in the current financial climate. The fate of Evergrande remains uncertain, a stark reminder of the risks inherent in the world of high finance.